There was a time when the future had no charts, no screens glowing with numbers, no trading floors shouting predictions, no algorithms calculating risk in milliseconds. And yet, empires still planned for tomorrow. They wagered on harvests not yet grown, wars not yet fought, and trade routes not yet opened. They made decisions whose consequences would unfold decades, even centuries, later. This is the paradox of ancient power. Long before stock markets or economic models existed, civilizations were already forecasting the future. It's not with code, but with belief, structure, and control. To understand how ancient empires predicted their fortunes, we have to abandon the modern idea of forecasting as a purely mathematical exercise. For ancient societies, the future wasn't a probability curve. It was a resource to be managed. Empires didn't ask, "What will the price be next year?" They asked, "Who will control survival when scarcity arrives?" The earliest forms of forecasting were born from agriculture, because food was the first market and survival was the first currency. In ancient Mesopotamia, thousands of years before financial markets, temple economies tracked grain yields with astonishing precision. Clay tablets recorded debts payable after harvests, livestock owed in future seasons, and labor obligations tied to crop cycles. These weren't simple records, they were forecasts. If the harvest failed, debts were postponed. If a surplus appeared, loans expanded. The future was already being priced in wheat. This system spread because it worked. By anchoring obligations to predictable cycles like seasons, floods, and astronomical movements, ancient administrators reduced uncertainty. They didn't predict the future by guessing, they constrained it. The Nile did this for Egypt. Every year, its flooding determined the empire's fortune. Pharaohs didn't need markets to forecast growth. They needed flood levels. When the Nile rose predictably, taxes increased. When it failed, granaries were opened and debts forgiven. Egypt's power came not from gold, but from foresight institutionalized. The future was stored in grain silos. As empires expanded beyond agriculture, forecasting evolved from food to trade. The Phoenicians mastered this shift. They didn't dominate through conquest, they dominated through expectation. By controlling shipping routes across the Mediterranean, Phoenician merchants could anticipate demand months before goods arrived. Tin from Britain, cedar from Lebanon, dyes from Tyre prices were understood before transactions ever occurred. Risk was managed not by diversification, but by geography. If one port failed, another compensated. If one harvest collapsed, another region supplied. This was portfolio theory, without the math. The Romans took forecasting to a whole new scale. Rome's greatest innovation was not the road or the legion, it was logistics. The empire forecasted its future by controlling the flow of grain, money, soldiers, and information. The Annona system guaranteed grain shipments to Rome years in advance. Contracts were written long before ships sailed and private merchants were incentivized with state backing. Rome didn't wait for shortages to react, it planned scarcity out of existence. But forecasting the future also required predicting human behavior. Here, Rome learned painfully hard lessons. As expansion slowed and military costs rose, the empire faced obligations it could no longer meet with existing resources. Rather than default openly, Rome altered the rules. Coins were debased, payments were delayed, prices were controlled. These were not random acts, they were forecasts that the future could be bent by authority. They were wrong. Ancient China approached forecasting differently. Instead of relying on markets or metals, dynasties forecasted stability through bureaucracy. The Han Empire built vast administrative records, population counts, land registries, tax projections. Officials were evaluated not on profit, but on balance. Too much extraction led to rebellion. Too little weakened the state. The future was forecasted through harmony, not growth. When dynasties collapsed, it was rarely sudden. The signs appeared years earlier in falling tax revenue, peasant unrest, and corruption reports. The future was visible, but it was ignored. Perhaps the most sophisticated ancient forecasting came from Babylon. Babylonian astronomer priests tracked planetary cycles not for curiosity but for policy. Eclipses were treated as economic warnings. Kings delayed decisions. Wars were postponed. Resources were conserved. To the modern mind, this appears superstitious, but functionally it created risk buffers. Uncertainty triggered caution, and caution preserved power. Across all these cultures, one truth emerges. Ancient empires didn't forecast prices. They forecasted pressure, population growth, military demand, food supply, social tolerance. They understood something modern markets often forget. The future is not just economic. It is political, social, and psychological. Without modern markets, forecasting relied on structure. Granaries absorbed shocks, debt forgiveness reset systems, state monopolies stabilized prices. Empires that institutionalized restraint survived longer. Those that chased short-term power collapsed faster. This was forecasting as governance. Eventually, these ancient methods reached their limits. As economies grew more complex, centralized foresight failed. Information lagged. Corruption distorted signals. Authority replaced adaptation. And so markets emerged, not to predict the future, but to distribute uncertainty. Prices replaced priests. Interest replaced intuition. Markets replaced memory. But the ancient logic never disappeared. Even today, governments forecast through grain reserves, energy stockpiles, military budgets, and demographic models. Central banks track expectations, not just numbers. The tools have changed, but the instincts have not. Ancient empires teach us a final powerful lesson. Forecasting is not about knowing the future. It is about preparing for fragility. The greatest civilizations didn't survive because they predicted perfectly. They survived because they built systems that could endure being wrong. And in a world once again obsessed with forecasting, speculation, and certainty, the wisdom of the ancient world returns quietly. Asking a question we still struggle to answer. Are we planning for growth or planning for survival? Thanks for watching. If you enjoyed this, be sure to subscribe for more.